But you could see silver $150 quite easily before you start saying, well, we're getting towards a normal long-term silver-gold relationship. There will be people panicking in the West because they haven't got any. And I go back to my earlier point. What else do you buy?
Hey guys, Sean here from sgtreport.com. Thanks so much for joining us. We have back on the line our good friend Alasdair Macleod from financeandeconomics.org and goldmoney.com. And also on the line is our contributor and good friend Rory. Alasdair, how are you today?
I'm very well indeed. Very nice to speak to you, Sean.
Yeah, it's been far too long and Rory's back on the line. It's like old times, isn't it, Rory?
It sure is, and I love it, and it feels great to be on the line with you guys.
Well, love having you guys back. I want to talk today specifically about the state of the U.S. economy, Alasdair and Rory. I really think the situation at this point is dire. I think the Fed is completely out of bullets, as we've discussed before. And I want to share this article from Michael Snyder. Guys, did you know that the average age of a minimum wage worker in the United States is 36 years old? It's not teenagers. It's working moms and working dads just struggling to make ends meet. And it may be hard to believe, as Michael writes, but right now only 44% of all U.S. adults are employed for 30 or more hours each week. We see information, though, guys, coming out from the Fed saying that we're in a recovery. All numbers point to that being completely untrue. And I guess I just want to open up with this question, guys. When will the next shoe drop, and what will it be that will lead us into this collapse? Because the numbers show we are in a collapse.
Well, I think that's right. The collapse is there. But if you put yourself in the Fed's shoes, how could you possibly admit that things are not going well? I mean, the trouble is that according to Keynesian economics, there's an awful lot of confidence involved, if you like, in getting the economy going. And the last thing the Fed wants to do is to destroy any confidence by admitting the true situation. And I think it's actually as simple as that.
That's pretty simple and straightforward.
I mean, they're bullying it up,
I think it's really evident, too, guys. As we all know, our listeners are well aware of this. The readers over at SGT Report are well aware of the fact that there is no justice ever. What we are seeing in the market is the Federal Reserve, the central banks, work for Wall Street or vice versa. It's a good old boys club, and those left out in the cold are the middle class. You know, the people that have to gut it out day to day, the people that have to take public transportation to get to that minimum wage job. We're seeing a report from Zero Hedge that 7 days before Eric Holder's 90-day ultimatum expires, the Department of quote-unquote justice has declined to prosecute Citigroup for its role in LIBOR rate rigging. Just more evidence that there will never be any justice ever, and these too big to fail banks are now too big to prosecute banks. And it's just the absolute epitome, in my mind, Alasdair and Rory, of fascism.
That's a very strong statement. I know how you get there, and I can't fault the logic. What we don't know is whether or not Citigroup have actually rigged LIBOR. What I don't know, and I should know off the top of my head, is how they've come out of any inquiry with the Financial Conduct Authority in London, because LIBOR basically is a London market, and if a crime has been committed, then it would be here. But very often it's not a question of crime, it's a sort of not behaving responsibly, and we will fine you. And if you accept the fine, then we won't have to go to court over it. It's that sort of, if you like, blackmail almost of the institutions. And as I say, I don't know whether Citigroup has actually been, if you like, accused in London of that. I mean, the fines that have been going backwards and forwards on LIBOR, on gold, on and we've got our own things here too. Things called payment protection plans, which were missold. I mean, the cost of that has just been absolutely enormous. And the fact of the matter is, whether Citigroup is guilty of one thing or another is actually not the point. These banks have all been behaving very, very badly.
Right. Yeah, that's right. To single out one is ridiculous when we know there's so many involved. HSBC and others. JP Morgan has had more than its share of fines in the past several years. I wonder if it's even paid them all. I mean, JP Morgan alone has had billions of dollars in fines.
Yes, and JP Morgan were very sharply fined for London. I mean, the amounts the amounts that the FSA and now the Financial Conduct Authority extract from the banks have been pretty small compared with what goes on in New York. But JP Morgan were fined, I think, 29 million. This is about 3 years ago for confusing the ownership of assets in segregated client accounts. Custody rules are extremely important, and any bank that confuses its own property with its customers' property, obviously, should be fined very, very heavily. And J.P. Morgan were made an example of. And since then, we've had another American bank, big custody bank. I think it's Boney and Mellon. That's one bank nowadays, I think, isn't it? Bank of New
Yes.
York, Mellon. Yeah, they were fined fairly recently as well for doing exactly the same thing. This just tells me that there is an endemic problem in the banks. They do not behave properly. The way they treat regulation is they game the system. And sometimes they step just that little bit too far. But if you're gaming the system, who are the clients? Who are the customers? I mean, it's not you and I. It's it's the regulator. They're the customer. How can we cheat the regulator? Do we matter? No, we don't. We're nowhere in this. It's a big, big game. We don't matter anymore. We're just almost an inconvenience, particularly since it costs money to hold our cash now.
Right.
They're trying to do away with our accounts
Right.
because we're too small. Unless we've got 10 or 50 million bucks or something.
Yes.
Yeah.
It's a waste of time for them. But that's another unintended consequence of zero interest rates. The banks suddenly find that it's actually not profitable to offer any form of banking service. So now unintended consequence of all this is they're now banning us from having cash because it's too expensive, it's too difficult, and so on and so forth. It's plainly a very, very broken system.
Well, you said my words of describing the banks in this process as being fascist were strong, but I'm going to stick with that because as they do try to ban cash, what better example of fascism is there than to remove the spending power, the purchasing power, and the privacy of purchasing what you want, when you want, from who you want, from the people? Total fascism unfolding, as has been predicted here and so many other places. And before I bridge back to what happened in 2008, I just want to cite the words of George Carlin, because what you were saying there reminded me, Alasdair, of George Carlin's words. It's a big club, and you and I ain't in it. And I know Rory probably has some thoughts about the economy, too. So, Rory, why don't you jump in here before I play this soundbite, this flashback to the 2008 crisis?
Well, I just wanted to comment on what Alistair was saying as far as they don't need us. They sure don't need us at this point because they just print all the money that they need and they get it for free. And we are more of a pest than anything because, we remind them that there are laws, there are regulations, and, you need to be in front of a judge. So they really don't want or need us at all in light of that because we're constantly reminding them that, you're breaking the law. To which they go, what law?
Yes.
Here's the regulator right here, and the regulator says it's a misunderstanding, it's a misallocation, it's this or it's that. But it's not. It's not against the law. I mean,
Right.
for goodness sakes, we'd have to jail them if they broke the law.
Right.
But Rory, who makes the law?
Exactly.
Right. Well, guys, as it
You know,
relates to the
it's
agencies that are supposed to oversee these, the Wall Street criminals and the big banks, take a look at the CFTC, you're right? I mean, Gary Gensler, former Goldman Sachs, I was reading an article not too long ago, guys, in which it said that Hillary might be grooming Gary Gensler to be the next U.S. Secretary of the Treasury if she becomes president. I thought that was pretty hilarious.
Yes. Well, you've got Wall Street and Main Street, and never the twain shall meet. I think, unfortunately. There's another thought, actually. The difference between fascism, you said fascism, use that word, fascism and communism, is the communists like to own the means of production. The fascists like to regulate you.
Yeah, that's a good point. I often, when we put up articles at SGT Report and we try to categorize them, we categorize them with economy, precious metals, all these various categories. And I often click fascism as one of them because it is the marriage of corporations and government. So Monsanto and many of its activities, and the revolving door at the FDA, great example of fascism. The revolving door at the SEC and these big banks, and another great example of fascism in my mind. It's sort of that Mussolini, as he defined fascism, is the marriage of the corporatocracy, the marriage of corporations and big government. But if I may, guys, let me ask you this. As it relates to the current state of the economy, is what we saw in 2008 the day of reckoning? Because that's what John Williams is saying. And I know we've all been following John Williams' work closely here in the alternative media. John Williams has been suggesting that hyperinflation will start to rear its ugly head probably in 2016. And he just said in his recent interview with Greg Hunter, and I'm going to quote, "It's just a matter of time until the market begins to reflect the impossible circumstance here, flight from the dollar, heavy inflation working its way into a hyperinflation." End quote. Alasdair, I know you've been writing about deflation and why it is unlikely. Do you tend to agree with John Williams about the state of the economy and the potential for inflation and hyperinflation in 2015 and moving on into 2016?
Yes, I do. I think that the people who believe that deflation is the most likely outcome, I think, are just looking at the immediate problems that are visible. And the most immediate problem is, as we started off this interview, the economy, the US economy, and indeed every other economy more or less in the world, is not recovering, and it's threatening to teeter into some sort of slump. And of course, one associates a slump with lower demand and lower prices and all the rest of it. But as Frederick Bastiat would say, what you're ignoring is the amount of money that's been printed so far and the amount of money yet to be printed in order to stop this happening. You can bet your bottom dollar, if it's worth anything, that the Fed will print enough money to ensure that prices don't fall. And they have a mandate to do that, because the point about 2008 is that as a remedy to stop the world falling apart, and I remember how scary it really was. I'm sure we all do, but you need to remind yourself how scary it was, how the whole thing was going to fall apart. The banks were going to collapse and all the rest of it, and what was going to happen to my money in the bank? It really was very, very scary. The Fed stopped it. This is according to the Fed. They stopped it by making whatever was necessary available in terms of credit and hard money if necessary. And now they know that works, they will do it again. Yeah. And this time, if 10 times as much money is required, they will produce 10 times as much money. So I'm quite clear that in a two-act drama, 2008 was Act 1. I think 2015-16 is Act 2.
You know, it's so interesting that you would talk about how scary it was in 2008, because I completely agree, and people forget. It's so easy for that stuff to go down the memory hole, and people forget, which sets us up to repeat history. And I just want to play this soundbite. It's 45 seconds long. It totally backs up what Alasdair is saying about the fear in the market that day. And as you guys listen to this soundbite from Representative Paul Kanjorski, a Democrat from Pennsylvania, this was recorded on C-SPAN in 2009. And Kanjorski really let the cat out of the bag. So Alasdair and Rory, as you listen to this, you tell me what could trigger this kind of electronic run on the bank? Because I don't think it's the average Joe with his Ameritrade account. Listen to this.
It was about September 15th. Here's the facts, and we don't even talk about these things. On Thursday, the Federal Reserve noticed a tremendous drawdown of money market accounts in the United States to the tune of $550 billion. Was being drawn out in a matter of an hour or two. The Treasury opened up its window to help. They pumped $105 billion in the system and quickly realized that they could not stem the tide. We were having an electronic run on the banks.
Now, Alasdair and Rory, as you hear Representative Paul Konjorski admit that there was an electronic run on the banks in 2008, my question to you guys is, what could cause that? Was it central banks working? Was it some sort of monetary warfare? What could have caused an instantaneous electronic run on the banks to the tune of more than $500 billion in 1 hour?
Let's just take a step back and understand that the enemy, if you like, that makes it difficult for the Fed to manage the system, to stop it imploding, is physical cash. That's the one thing that's out of control. If you go to the bank and you start drawing cash out, that's very different from you moving money from a deposit in one bank into a deposit in the other bank, because the money market sorts out the difference, if you like. So if Bank A ends up short of money because people are drawing down on balances and they're putting it into banks B and C and D, it gets recycled through the money market. If banks B, C, and D are worried about the solvency of Bank A, then what happens is that the central bank steps in and makes sure that money does revolve round. So in a sense, I think that apart from that cash bit, and this could be one reason why there seem to be moves, there seem to be suggestions that we can do away with cash. We should just have electronic money and not have cash anymore. I won't go down that route, but I think that given that that is the one hurdle to the Fed actually being able to manage the system, where you get a run on one bank, recycling it through the system, then I see this, this sort of the question of cash in that context, rather than necessarily in the context that we're all criminals if we spend. If we use cash, we're either evading tax or we're terrorists or whatever. I think put that to one side. It's actually about a systemic risk. So we should be interested that at the moment this has become a subject. I think that the chief economist at Citibank has written about it, for example. I can't remember, there was someone else wrote about it. We've had, when you get negative interest rates, of course, you do tend to get the tendency for people to move money out of banks, because if your cash deposit is attracting negative interest rates, then obviously it's far better for you to go to the bank and draw it out in physical Swiss francs or whatever your local currency is. So I think that's a slightly separate thing. But the point is that having physical cash, if you like, is probably now the only impediment to the Fed acting as ringmaster for the whole system and stopping the system falling over. The problem we now have, I think, and going back to your basic question, is if you're going to sell dollars, what are you going to buy? Are you going to buy foreign currency? I think that's probably slightly less likely now than it was, say, in 2008 or potentially in 2008, because the euro system, I think, is very fragile. You've got Greece, which is going to default, in my opinion, in the coming weeks, and complete default. The Greek banks will go bust. We'll be lucky if the systemic issues that a Greek default creates for the ECB do not spread and get out of control from the point of view of the ECB. I think that's important. Japan, I can't say anything about Japan because it's almost a closed system. The only people who bother with yen are the big Japanese banks. And we know that they've been hyperinflating in terms of issuing currency and money, if you like. So Japan, I think, is not an option, which leaves us with other things like, I suppose, Swiss francs, small market, Danish kroner, tiny market.
Gold.
Well, the problem with gold, I think the three of us automatically say gold. But most people in the West have had gold educated out of them. The only people who really understand gold now are a few, let's call ourselves cranks like us, if you like, but particularly Asians. I mean, the Asians understand gold, right. Because they know what happens with paper money. They haven't had this educated out of them by macroeconomic theory, which is complete rubbish. They understand gold. But in the West, unfortunately, we don't. I mean, what people in the West do is they sit here and they say the trend in gold is done, therefore I'm not going to buy it. Which is a completely nonsensical view to take. when actually what you're doing is you're trying to escape from systemic risks. And I'll put it another way. I know I'm sort of moving off the original topic of a bank crisis, but if you, let's say, sell a property, it may not be the home that you live in, but if you sell a property, what do you do with the money? Do you put it into another property? Do you put it into bonds? Do you put it into equities? I would say that these things are incredibly expensive. It's a very difficult decision to take. You probably want cash, and now we're being told that you can't even hold cash. So what do you do? I mean, sooner or later, someone is going to wake up and say, "Well, about the only thing we can really buy is gold and silver."
Mm-hmm.
And you can actually do that. You can buy bullion. You can have your bullion stored, and you can have as much of it as you want. You don't have to go to the bank and convince them you're taking out $10,000, and the bank says, now this is a money laundering issue. What are you going to do with that money? And unless you can really convince us, we're not going to let you have that money.
Mm-hmm.
There is a ban on cash, and I agree with the sentiment behind your statement. Well, gold. They haven't stopped us with gold. It's the one thing that you can do. It's the one thing you can buy to escape this crazy, crazy system.
Right.
The problem is nobody in the West actually understands this. The ordinary person doesn't understand it. They think, well, gold's going down. It's been a bad performer. Why should I buy gold? You must be nuts,
Right,
telling me to buy gold.
But I think that's what's important, though, about this conversation. I'm sorry to interrupt, is that the people in the West, our friends, neighbors, and colleagues, have been brainwashed. So when another electronic run on the banks occurs, which it will, eventually, history repeats itself, and this system right now is very long in the tooth with the economy really collapsing, according to all of the real numbers, which John Williams and you and we discuss. When another electronic run on the banks happens, our friends, neighbors, and colleagues will be completely unprepared because their entire life paradigm is wrapped up in this ones and zeros, and these ones and zeros they see in their brokerage accounts, Alasdair. So I guess my point, too, on that run on the bank is that wasn't mom and pop. That wasn't me and you. That wasn't Ameritrade and E-Trade account holders. That was a coordinated attack. $550 billion in an hour? If it happened in 2008, it could happen again. And my question is when? And boy, if you don't have gold, I don't see how you survive it.
It could happen, but I don't know who's going to trigger it.
Mm-hmm.
There's so many things that could actually tip this system over. I mean, is it Greece? I don't know. But there is another aspect of this which nobody really seems to appreciate, and that is the purchasing power of your dollar is entirely subjective.
Yeah.
We think in terms of prices. We think that when a price changes, a price for, let's say, a motor car changes, it's the price of the motor car changing. We never think it's the purchasing power of the dollar that's changing. Now, at some stage, I think it's probably after you get a problem in the banking system, there is going to be a loss of confidence in the currency. Now, as soon as people start losing confidence in the purchasing power of electronic money, physical money, whatever it might be, then the currency is doomed. And to my mind, that is the ultimate danger. I don't know what triggers it, whether it's an event such as the one you described, whether it's a derivative problem, whether it's a crash in the bond market. I mean, for goodness sake, if you think about bond prices, a jump in yields of, say, 1 or 2% could probably wipe out some of the Eurozone banks. I mean, that's a horrendous thought. So something like that could well be the trigger for the whole thing.
Yeah. Who knows when and who knows how, but again, as John Williams is saying, we are on our way into heavy inflation and ultimately hyperinflation, and I think he's right. It's just a question of when. Rory, I know you cover all these issues too over at your news site. What sort of perspective do you have on this stuff? And as it relates to having Alasdair here as our guest, what do you have for him?
Well, what I was thinking that while you were explaining everything, Alasdair, and the original question that you asked, Sean, $550 billion evaporating electronically in an hour.
Yeah.
The only way that I see that could actually happen would be AIG had already blown up. Lehman Brothers had blown up. We know that their derivatives book were included in that blow up. And there was something that was smoldering in the background, just like that's happening right now as we're having this conversation with the bank that blew up in Austria a few weeks ago. So my belief is that something blew up and it was smoldering in the background. It surfaced at that time and they didn't see it coming. And if they threw $105 billion at it and it's still growing, what else could it be? It's not like you said, Sean. It's not mom and pop out here. It's not anything that the typical trader is going to be able to affect in that manner.
Mm-hmm.
And it's the only thing that for me that makes sense. And Alistair, you can help me to understand this as far as what's going on with that Austria bank. I still think that there's problems with that, and because it kind of spiraled in the background and blew up that bank, another bank over in Germany, and we've got this issue with Greece, as you've alluded to a couple of times. And I agree with you wholeheartedly that Greece is going to default. I've been saying that for months. I believed it since Tsipras was elected. That was what he was elected for, was to get him out of this mess.
Yeah.
And the only way to get him out is to say, well, this odious debt that you've straddled us with, we're not going to take it anymore. So thank you very much
Yeah.
for playing.
Yeah,
And
I mean that's right. I mean, actually, funnily enough, that I don't think they're playing this sensibly now.
it's
If
getting
I was
dangerous.
if I was the finance minister, I think I would effectively say I'm walking away from this debt. We cannot
Yes.
afford it. It's as simple as that.
It's just that
Um,
simple.
yeah, and instead, what they've done is there's been this sort of idea that if they're good boys and they pay back this and they pay back that, another 7 billion euros will be made available for them. I can't see that happening. I really can't see that happening. They've got a payment which is, I think, 750 million to the IMF, which is due tomorrow, and whether they go through with that or not, I don't know. But it's got to be. I mean, we're talking about 750 million euros of very precious money as far as the Greeks are concerned, because they're having to raid every account that the government could possibly
Yes.
raid in order to meet this demand. And after that, what? It's just so if I had been involved, I would have said, look, guys, I'm sorry, we're bust. And the sooner we recognise this, the sooner we can get on with our lives. And I think that's what I would have done. But you referred to the Austrian banks. You've got two problems there. Now, neither of these problems in Austria are enough to tip the system. But it could happen. It could happen. It could sort of, under a sort of chaos theory, it could well happen. The one problem is that you've got a lot of loans in Swiss francs, mortgage loans, which are channeled through Austrian banks, and the loans are held by, sort of Bulgarians, Hungarians, Poles, and Latvians, and all the rest of it. So when suddenly the Swiss bank were forced to stop pegging their currency to the euro, there were huge, great losses all of a sudden put on the shoulders of those customers. That's one problem. The other problem is the bad bank that that the central bank in Austria put together. And most of that has been backed by the state of Carinthia. And Carinthia, again, I think, are almost forced to walk away from this one because they can't meet the demands of it. So they're going to be losses from that. Now, again, this each individual problem isn't enough necessarily to tip the system over. Mm-hmm. But one day, one of these problems is going to have unforeseen consequences, which is just going to, sort of escalate out of control. It's rather like, the stage act with the guy with the spinning plates on top of canes. He gets more and more going, and you sort of think, oh my God, one's going to fall, and he just manages to get there and sort of whiz it round again, and so on. I think that the big central banks, the Bank for International Settlements, acting as ringmaster probably, they're in that sort of spinning plate game, and sooner or later, I'm afraid they're going to drop one. We just don't know which one.
Yeah, individually we don't know which one could be the trigger, but collectively all of the problems are really, really starting to add up. And before we let you go, Alasdair, let's just talk a little bit about gold. I think I read recently that Jim Rogers says he's more than happy to buy more gold below $1,000 an ounce. Do you see a scenario at this point, given all of the topics we've discussed, given all the geopolitical and economic global turmoil, do you see a scenario in which gold could trade below 1,000? I suppose it could, since they manipulate the prices of gold and silver. But what's your take on gold? Where do you see gold headed?
Well, anything's possible, but my goodness, what an opportunity to buy gold. Bring it on.
Below 1,000? Yeah.
Oh, wonderful. Gosh, yes. I mean, I can't think of anything better.
That would put us at about
Unfortunately, I don't think
$10
it's going to
silver.
happen. I mean, I don't think it will happen. I mean, so who's long of gold at the moment? I mean, there are a few people like us. We understand the fallacies of modern macroeconomics. Let's put it no higher than that. And we want insurance, if you like, against the system falling over. And however much insurance. I mean, the insurance premium is getting cheaper, for goodness sake, when the risk is getting greater. I mean, this has got to be the biggest trade in history, hasn't it? It, you know, Jim Rogers. I mean, I could make a statement like that. My God, if gold fell to $500, I would really buy it.
Yeah,
But
right.
it's a completely meaningless statement. It really is.
Well, and I suppose $1,000 gold, at 70-1 gold to silver ratio, what would $1,000 put silver at, guys? What are we talking then? About 12,
Yeah.
$12 silver?
Well, they would be way down, certainly. I mean, that also is completely nonsensical. Um, silver. There's a lot of demand for silver.
Yeah.
There's huge industrial demand for it. It's a unique metal. Its electrical qualities, its antibacterial qualities, and all the rest of it. It can't be replaced by anything else. And of course, we're manufacturing things like solar cells and. I mean, we're even disinfecting our socks for goodness' sake,
Mm.
using silver. So I think that that again, you just have to shut your eyes and say and ask yourself: is this something that is actually needed by humanity to the point where I'm prepared to buy it? I would say the answer is very definitely yes at current levels. Um, and once the if you like the banking system starts rattling a bit, once the purchasing power of money starts getting questioned, then the way to gear up on that, if you've missed the boat in gold, is just to get a little bit of silver, and it'll make up for quite a lot of your indolence in buying gold in the past.
Especially if that 70-1 ratio starts to adjust to its either natural ratio or historical ratio. I mean, my goodness, just that move alone, which is what got me into silver in the first place, is that's incredible.
Right.
I mean,
Yeah.
Yeah.
Well, I mean, quite simply, silver seems to move on average about twice as much as gold. So on the way up, as the price rallies, then obviously that ratio is going to come down. And you can calculate a point. I don't know where it ends up, but you could see silver $150 quite easily before you start saying, well, this we're getting towards a normal long-term silver-gold relationship. But I think above $50, that will start restricting industrial demand, and investment demand would have to begin to pick up. But I think if we saw silver getting up to $50, it would be because gold is sort of looking at $1,900, $2,000. And I think that there would be people panicking in the West because they haven't got any. And I go back to my earlier point. What else do you buy? There's nothing else that you want. Do you really want to buy government bonds on such low yields when it's quite clear that no government is ever going to repay it?
Yeah.
I mean, and equities are priced off the bond market, so the same story applies there. Um, Property, governments tax you. I mean, we've had a very narrow squeak because if we had elected a Labour government, or even a coalition of socialists, they would have started taxing high-end property doubly hard. That was all in their manifestos, and they'd be bound to do it. And people were already sort of thinking, oh, we better leave this country. Um, but we had an election result where that's not going to happen. So the problem with property is that the government sees your property, and they can tax it, they can steal it from you, they can do whatever they want in extremis. And I think we are talking potentially about protecting ourselves against an in extremis position.
Yeah, absolutely. And, Rory's point about the silver to gold ratio historically is so important. 15 to 1, 12 to 1 coming out of the Earth's crust. 15 to 1 was sort of the monetary relationship for centuries. And, we're seeing mining ratios today as they try to pull precious metals out of the ground, where silver is being pulled out of the ground at more of a 9 to 1, 9 ounces for every 1 ounce of gold that's mined. And that's a stunning statistic. So, again, as we talk about silver manipulation and as we talk about these historical ratios, it just merits saying that Charles Savoy has done the homework on the centuries-long conspiracy, the pilgrims and the people behind the conspiracy to suppress silver and demonetize silver in his series Silver Squelchers. Highly recommend people read that important work. And I highly recommend people keep up with Alasdair's important work on a daily basis. Alasdair, can you remind people where they can find your work?
Yes, I'm head of research for Gold Money, so on goldmoney.com. And I also have my own website which repeats pretty well what I write for Gold Money, but also sometimes I put my articles which are not within my remit for Gold Money on financeandeconomics.org, O-R-G.
Well, we definitely appreciate your voice, Alasdair, and I certainly appreciate your time, as I appreciate Rory's too. Rory, tell people about your own website, in addition, of course, to SGT Report.
It's thedailycoin.org, and covering economics and finance and gold and silver and geopolitical issues.
I appreciate you guys tuning in as well. It means the world to us. Thank you so much. We do want to document this collapse. That is the goal of what we do with these interviews. We're documenting the collapse. I know that the powers that be would tell you that we're in a recovery. I think most of you are well aware that that is a fable, much like so many of the other official fables we are constantly told about. Alasdair, again, thank you so much.
That's my pleasure, Sean.
Thank you, sir. And Rory, thank you.
Thank you.
Guys, thanks for tuning in, and thanks for supporting us at sgtreport.com, thelibertymill.com, and thephaser.com. Real news, 24/7. Have a terrific week. Bye-bye.